Common sense is more likely to be in the female traders. Lack of common sense is usually in the men. So when you have this moment of conflicted analysis, the men will want to go in there and prove themselves. I'm better than this. I'll carve out something. I'm going to grab my club like a caveman and I'll go out there and bonk something over its head and drag it back to my cave because that's the way we roll. Where women will say, you know what? This isn't worth the risk. I have other things I can do, and I'll come back and look at the chart did, and it won't cost me any money. It won't cost me any time. It'll be a smaller time investment looking at it in hindsight, and I'll be able to glean whatever it was that took place from a risk-free perspective. Men generally don't like to do that. That's why men generally don't like to backtest, because they don't view that as effective club use, like a caveman going out there and bonk something over the head and drag it back to its cave. So if you ever get to the point where you can find your spouse or significant other, as a trade partner, where that way you can be accountable to one another. If you're honest with each other and you're able to support one another and try not to compete, I believe that's the only way two minds can come together and be effective. If it's a spousal type thing or a life partner where you're committed to that person and you maybe haven't gotten married yet or whatever, but you care about that person, you're trying to carve out a life with them. If you're both on the same page with learning how to do this, you can complement yourselves very well. What will not work, it will not work, is if you have your bro, okay, your buddy, the guy you go to the clubs with, the guys you hang out with on social media. You will find that usually will present static. And static happens when two things rub together, and men generally are abrasive. So there's going to be static, and one's going to want to size up the other. One's going to say that they're better or more right about something, and feelings will get hurt because of that superiority complex that one of them is going to have. And it's unfortunate, but that's just a weakness in men. You want to avoid those things in your trading. So how this fits in this is if you have a condition where the market is more likely to present a frustrating lack of precision elements, things that are favorable for low resistance liquidity run signatures, easy trading, let's call it that way, okay? Easy trading days are not going to be found in what I'm showing you in the chart right now because it's problematic. And you don't want to invite the opportunity for you to discover that you should have stayed out. And when you get yourself in that situation, you will feel emotional regret. And you'll do what? You're going to want to replace that feeling of regret, remorse, because you didn't stay out, because you wanted to do something to see what would happen. Now you found out what would happen, and you don't like what took place. You had a bad experience, and you're going to want to fix it real quick, because you're thinking if you fix it, that is the Band-Aid, and you'll never do that again, when it's not true. Because if you can fix it, you're going to think, well, I'll take the chance again because I fixed it the last time. I'm a better trader than I thought I was. So many people, and even myself when I was 20, I thought I could do that, and it just made it worse. So you don't want to invite the opportunity for you to get emotional. See, you don't see me emotional when I'm in a trade. Like I really don't give a shit what it's doing. I'm just monitoring and managing what it is that I believe it shouldn't do. I'm allowing the time element to let price do what it might do. The probabilities are there for it to reach to a liquidity or an efficiency, the draw on liquidity. I don't know with 100% of surety that it's going to do that, because if I did, I wouldn't use a stop loss and I would go full margin every time. But because there is a hand in this world that manipulates and will disrupt things that are in modes of continuity, you have to preserve yourself with the only shield you have, which is risk and money management. So when you get into these situations and you trade and you force something to occur, and try to make a trade happen because you want to see where you measure up with someone with 3 decades of experience. Then you find out you should have done nothing and should have listened to the old man. Now you're in that position where you're damned if you do and you're damned if you don't. Because if you sit still, you're still going to sit still and regret. But if you sit still for a long enough time, you're going to try to fix the problem that you created for yourself and trade again in conditions that's most likely not going to favor you being profitable or overcoming the drawdown. And you'll do what? You'll increase your lot sizes because you're thinking, okay, the market's not moving that much. So I have to do a larger trade position and I won't need that much of a move to get myself fixed, Vinny. And it doesn't work like that, does it? You keep blowing out and blowing out and blowing out. That's a classic loser cycle. I know that. I did that when I was 20 years old. And I'm trying to teach you, all of you, how to avoid that. It's a simple process. If you can recognize and identify the moment where things are highly unlikely, you stop. And that means you put the pause button on trading even when you're in drawdown. Remove yourself from risk, come back another day. You have to do that. Because if you don't do it, your broker's not going to do it for you. I can't do it for you. And your spouse or your partner, they're likely not to be able to do it either. So you want to make sure that you're not inviting yourself into conditions that's going to cause you to be emotional, erratic in your decision making, gamblers. You don't want the gambler driving the car. The gambler's going to say how many times he can go over the yellow line and still not get in an accident. He wants to see how fast he can go before he gets a speeding ticket. He wants to see how many drinks he can drink before he crashes. That's the risk taker that you don't want running your business. The trader that defends the business from the gambler in you and listens to the wisdom and guidance of the analyst in you, that's who you are most times as a trader. You're always fighting to keep that balance point between not wanting to be the gambler, the reckless individual, the risk taker, the over leveraging, the more frequent trader than he should have been, and listening to the sound logic that comes from the analyst, the model. Once you know your model, that's the analyst in you. You refer back to, okay, what would the analyst have me do? Well, what's your model say? What's the rules? Don't trade in these conditions. Okay, I'm not trading. I'm not trading. But the gambler says, but listen, look at this. No, you turn the charts off and you go do something else. You deny the gambler any opportunity to start the car because the gambler's drunk. They're drunk on chasing a clout, attention, a feel good, a dopamine hit of being right. The gambler exists to be right. The trader doesn't need to be right. The trader is just focusing on profitability and managing risk. The analyst is just following rules. It's completely devoid of any emotion. It's not trying to prove anything. It has nothing to prove. It's in no competition. It doesn't care, ultimately, who's doing the executions or lack thereof. It's the logic, the model itself. The trader has to manage and wrestle the gambler, which is emotional and psychological tug of war. You're made up of 3 people: an analyst, your model. If you don't have a model, then there's no analyst. If there's no analyst, what are you? A trader that gambles. And you wonder why you're struggling. You wonder why you're losing on live streams. You're letting the gambler compensate for image. You want image to build you up, Vinny. Stop trying to impress everybody. Just simply follow sound logic. And when it ain't right, just stop. You'll do far much more damage if you continuously trade like that versus just using sound logic saying, okay, I keep doing the same things over and over and over again, and I keep losing. And then you're compounding that pain and frustration if you do it in front of the world. That embarrassment, that shame, that regret, that will fester. And none of that improves a trader. It causes more toxic thinking, and toxic thinking creates an opportunity to do what? More arm wrestling, more Olympic feats. And you're making trading harder than it has to be by inviting those very conditions. And you're doing it in conditions in the marketplace that are not highly favorable for really fast, easy runs. It's choppy right now. And an experienced trader that's been around profitably knows that. Someone that is hit and miss success doesn't see it, doesn't recognize it, can't even understand what's going on until afterwards, and then regret, remorse, emotional damage. So there's no shame in saying, I don't know what to do right now, so I have to wait for more information. Think about it. I told you before, this is war. When you turn those charts on, you're ready to do battle. If you don't look at it like that, because it's not a video game, it's not. It is your livelihood and other people's livelihood. That's not a fucking video game. Okay. You can lose your entire financial condition if you let yourself get reckless. You have to be sober in your decision making, why you're doing something, why you're not doing something. And if the market is highly unfavorable, and I have no shame telling you, I'm I believe I'm pretty good. And I don't feel any anxiety saying right now, I don't know what to do next. So therefore, I'm going to sit still. You never hear these other people out there that are claiming to be smart or teachers or mentors or gurus or whatever. You never hear them articulate why they don't know how to find something next. They are constantly trying to put something in front of someone saying, here's the next move. There's never a time when they have a lack of a opinion or analysis. They always have something they're trying to do. When someone that knows how to trade, has traded profitably, and has been consistently doing it for decades or a number of years, they're not going to talk like that. They're not going to try to communicate to the masses that they can always go in and do something all the time. That's the problem with social media. It makes you think that's the best thing for you to be doing for your audience or your student base or whatever. The gambler's running the show. You don't want that. You want the trader running the show. And the trader has the responsibility of running the business, where the gambler is just wanting to test drive daddy's new sports car when he's outside the house. The analyst, it's just the logic. The, the trader respects the wisdom that comes from the analyst or the model. The gambler doesn't respect it. The gambler thinks that they can operate outside the parameters that the model or the analyst would place on the trading business that you're running and feel like they can get away with it. And what happens if it's right? They can make a whole lot more money if you just break the rules and over leverage and buy more contracts or sell more contracts. And I have a couple more minutes left in the day. Let me just go one more time. That's a characteristic of someone that's not consistently profitable. I have seen that so many times over the last 26 years. Teaching folks that have that same hallmark example of lack of self-control. And that is a hard, I can't teach it. That's something you have to forge that on your own. And the only way I've ever seen it happen was pain and loss. And usually people with substance abuse problems are so numbed by either alcohol, drugs, they can't see what they're doing to themselves. And in their trading, they self-destruct continuously and they mask it. They hide it and they put band-aids and masks on so that way they can't ever really see it. And they hide it from anyone else. But you can't hide it from someone that can see what it is. I've seen it. Lots of individuals out there in social media, whether they're on YouTube or Twitter or Instagram, whatever it is, Facebook, those characteristics shine through any mask. Any attempt to hide it is not successful. You won't be successful in hiding it either. So why invite those opportunities? In short and in closing, we really are closing. When times are like this, when I'm telling you from the analyst perspective, there's no high probability. But if I say I have to decide something for you to study, don't take that as an invitation to say, okay, ICT just gave me the code word, we're going short. That's not what I said. I'm saying just study it, but don't have any interest in pushing a button, because I'm not going to be pushing a button. I'm not going to come back to you during the London session. I'm not going to come to you in the morning and say, hey, you need a dose and show you what I did. I'm going to be physically away from the charts. That's how I manage myself. That's what I needed to learn when I was 20 years old, because I felt like I was better than I was when I wasn't really good yet. I wouldn't be able to admit that back then. But knowing what I know now and who I am and what my skill set is now, I didn't know anything when I was 20. Even when I started making money, I didn't know shit. So it's imperative that you identify these times. And if I'm telling you I don't have a high probability condition right now, use that, adopt that as your experience right now, and just submit to that. I promise you, if you do this year, the times that I do it, and I'm going to explain why, and hopefully I've communicated it clear enough tonight as to why the chart's not communicating it to me in terms of a very high probability condition. So since it's doing that, and it's removing the opportunity for high probability, then I have to communicate that to you as a student. Otherwise, I'm not a good mentor. I'm inviting you to make your own decisions in quicksand. And what's going to happen is you're going to fall into that quicksand tonight or tomorrow, and you're going to get yourself stuck. And then what are you going to do? You're going to panic and you're going to start moving around a lot more. And in quicksand, the more you move around, the faster you sink. So I'm telling you, don't go near the sand. Do something else. I promise you the market will be there tomorrow afternoon. It'll be there on Thursday. It'll be there Friday. There's plenty of opportunities. Plenty. But you have to learn this skill set, because this is this one right here starts the whole drawdown blown account, because you're forcing something in conditions that are not conducive for high probability. So hopefully this was insightful to you. Hopefully I was able to communicate something that was beneficial to you and in your development. I promise you that a lecture like this doesn't have the same impact on a new student than that of someone that has gone through it and they can recognize, I wish I would have heard that when I first started. But it's unfortunate when people are new, they don't appreciate these types of lectures or discussions because they don't have any frame of reference. They don't know. And they think they're going to be the exception. And as good as I am today, yes, I thought I was the exception when I was 20, and I was not the exception. I was the poster child for failing.